Well, good afternoon. Good afternoon. It's Ronco Johnson, your lifestyle focused wealth coach and wealth coach. Today, we're going to be talking about the difference between life insurance planning and life insurance sales. We're going to dive into some of the information that you need to know and how it involves strategic financial planning versus just buying something you might not have wanted or may not have met your needs properly. And that's what we're going to talk about today on today's episode of Lifestyle Focused Wealth. And thank you for joining us. I'll see you on the inside. And let's talk about it. Here on When the Lights Go Out, are you ready? And, maybe you can pick up one or two free tips. And I'm going to give you the secret sauce, but you got to be on the inside to witness it. So I'll see you there. Hey, well, good afternoon. It's Ronco Johnson, your lifestyle focused wealth coach. And I can't get my words out already, starting already. And listen, today we're going to be talking about your lifestyle and what it means to have life insurance planning versus life insurance sales. And we're going to just be talking about that. And there is a difference between the two and what you need to know. And we're going to be discussing it, right? And I think you're going to find out that there's a few key differences in what you may expect from your insurance planner or your insurance agent or salesperson. So I just want to share a quick statistic with you. Did you know 41% of adults report not having sufficient life insurance? And that's over 106 million Americans that feel that their coverage is inadequate. So it's not surprising. It's not surprising that more and more people are looking for proper life insurance planning, right? It's not surprising. Well, we're going to dive into how to tell the difference and making sure that you understand the difference when you're sitting down talking with your advisor. Are you talking about more strategy or are you just talking about the product itself? And we're going to dive into that, and hopefully we're able to answer some of the questions that you may have. So I want to invite you, first of all, I want to welcome you back to When the Lights Go Out. Are you ready? And I want to just tell you, if you have any comments today, please put in the comments. Type in the comments. We want to hear from you all the way through our programming, because if you type in the comments and you put the words takeaways, we're able to figure out and see, and maybe I'm able to address it live while we're on air, what your takeaway was, or what is intriguing to you, or what was interesting to you, or something you want me to elaborate a little bit more on. And if you're watching this back on playback, no problem. Send us a little comment, like, share, subscribe, and we will get back to you. We'll send it back to you. You know, if you go in our DMs and send us a DM, we'll send it back to you. We'll answer your questions. We want to be a portal for your resources, right? So with that being said, do me a favor. It looks like 67% of you guys that are hanging out with us every week at 1 o'clock have not registered or subscribed. So do me a favor. We need your help. Hit the like button, hit the share button, and give us a thumbs up, and hit the subscribe button and tell someone, tell a friend that you're getting this information and this stuff is valuable to you and you have found value in watching our programming. And this helps us continue to give you the content that you're asking for. And our focus today, as always, is what do millionaires and billionaires do? We're talking about our very favorite financial tool today that we haven't talked about in a little while. But our favorite financial tool and how millionaires and billionaires see the process of purchasing insurance from a planning standpoint, or are they buying it from a product standpoint? And what role does it play? And we're in that conversation, I think you'll be surprised about how we introduce this concept of life insurance and explaining the importance of the difference between planning for it and having sales pushed upon you. So we're going to make sure that when you leave this particular episode, you'll be able to tell the difference and what it's all about. So let's just get right into it. What exactly is life insurance? What is life insurance? And what is it that we need to pay closer attention to? If we got to pay closer attention to the term life insurance, we must know one thing. Life insurance is a contract between you and an insurance company. And it exchanges premium payments. The insurer provides a lump sum payment known as a death benefit. And with that, to beneficiaries, the beneficiaries receive this death benefit upon a person's passing or untimely passing. Okay? So this financial support can be a lifeline for families. It's that important. It can be a lifeline for families in more ways than you can imagine. Ensuring that they can maintain their standard of life, their standard of living, cover their debts, pay for final expenses, funeral expenses, and so on. So the importance of life insurance does play a vital role when it comes to planning. And we're just going to get into it and give you a few items that I want you to be thinking about as you're talking about planning with your family and planning with your children and so forth. And we would just want to make sure you just got some bullet points. That way you know exactly where you're going, right? I want to say hello to everybody checking in very early and getting us started as usual. If you're in the comments, please put in the comments, hello, give me a thumbs up. I'm just waiting on everybody to get in the room. We're just waiting on everybody to get in the room because we got some good stuff to talk about today. Who knows? Maybe something I'm going to say today will impact someone out there, namely you, your family, your friends, in a very special way. And we want to be a part of that, right? I want to invite you to become a member of our Lifestyle Focused Wealth community. Why? Because we need you. Everything we need is in the room, but we need you. Your impact is felt all over. You know, when you're at the water fountain at work and you're talking about the last episode that you heard information, or maybe you're at school or at work and you're just strumming up a different conversation over the holidays. These are topics that really matter, and they do bring value to you. They bring value to your family. So like I say all the time, we need you to be a part of our community. And just go online and go to roncojohnson.com, and you can become a member. It's as low as $16 a month when you pay the annual subscription. So I can tell you now, if you want to take part in being part of a community and participating in what other people are already doing, becoming their own family banking systems, getting out of debt, paying off the school mortgages and all the good stuff, you may want to be a part of our group. So more details about that a little bit later. But first, let's go back to what life insurance is really all about. First of all, we're talking about providing financial security. And providing financial security ensures that your family can sustain your lifestyle. And it covers the necessary expenses that it's going to need, that you're going to need. And a lot of times, this goes without saying, if you're an agent, advisor, or a planner, we're usually thinking along these lines. But life insurance is not about just when you pass away. It is also used when you're living, for paying off items such as debt or student loans or other loans. It can cover outstanding debts and mortgages, car loans, personal loans, and preventing your family from bearing these burdens that you may leave behind. Those things are important. The third reason is covering final expenses, because it can help your family with funeral costs. It can help your family with medical bills that are not covered by health insurance. And the fourth is overall peace of mind. We really want to focus on the peace of mind part, because knowing your loved ones will be financially secure, it provides the peace of mind that allows you to focus on the other things that are important in your life while you're living, right? So today's episode, we're going to be talking about planning versus selling insurance and the life insurance planning method. In that life insurance planning method, a lot of times a consumer won't be able to tell the difference. But once you start going through some of the needs analysis and approach, you'll start to see if you're dealing with a planner or if you're dealing with more of a salesperson. And I'm going to tell you how to basically figure that out. But in the life insurance planning model, okay, there's a needs-based approach. And there's three different approaches that I like to talk about. I want to highlight them. The number one is a needs-based approach. Number two is customization. And number three is long-term perspective, right? So the needs-based approach is very simple. It involves evaluating a unique financial situation. And the goals to determine the type of insurance you need and the type of that type of insurance that you might need and the amount of insurance that you may need, okay? The number two one is customization. This is when you're tailoring policies to fit an individual's need, such as term insurance, whole life insurance, universal life insurance. It really doesn't matter. It's really being tailored down to fit that individual, that family, and their goals, right? And the long-term perspective is simply focused on ensuring long-term financial security for your loved ones, such as maybe paying off a house in 30 years or leaving some extra dollars for college fund. Those are those types of things that we're talking about. But when we're talking about life insurance sales, right? And I say sales meaning S-A-L-E-S. This is more product focused in their approach. The primary thing is about selling the policy to clients based on the available products that are available to that salesperson or agent. Typically commission-based, it's often driven by an agent's need to earn commissions, unfortunately, in which it can sometimes lead to a pushy salesman talking to you about a product that does not entirely fit your needs as a client. So, and it's also based on short-term focus. Your short-term focus is more about closing a sale than understanding the client's long-term picture. And a lot of us don't understand what's going on as consumers. Don't understand what's going on right there in front of you. That's why we need this education, financial literacy, and then financial intelligence. Because if we're able to figure out that, okay, I need to know more about this product. I need to know more about how I can customize it. Or did I even miss that I could customize it? Did I miss the fact that there are multiple types of insurance policies? Am I only segued into one product? Well, the answer is up to the individual. I think you have to have the individual have the opportunity to know what's available to them. What are the advantages of all of them out there? Because each one of them work very well in different situations. And, if you talk to one of our lifestyle focused wealth advisors, some of our folks over at Ronco Johnson and Associates, I'm sure we'll be willing to help you out and help you just disseminate, hey, what is better for you? Have your goals changed over your lifespan? Did you add a family? Have you bought a house? Are you near retirement? What things need to be adjusted? That's important to know. It's highly important to know the difference, right? So by understanding these differences, you can make an informed decision about what type of coverage is best for you. So proper planning ensures that you have the right type of protection. We want to make sure you're protected in the right way. That's all. That's all we want to do is make sure you're protected in the right type of way. And if you're doing this properly, rather than just purchasing a policy that might not fit your needs, you can have something that without a doubt is going to protect everything you care about. So if you have more questions and details, do me a favor. Just click our button. Go to roncojohnson.com. Click our button. It's free to ask. And sit down. Schedule some time to do a one-on-one with one of our advisors, and we can talk to you about it, okay? I want to say hello to all of our friends. I see you out there, Miss Donna. I see you talking about Wisconsin. It's cold out there. I see you. I know, but I'm down in hot Atlanta, so it's not quite as cold as it is up there, but perfect. I see my folks happening. Hey, Sam. Hey, Leela. How are you? Thank you for joining us today. I see everybody popping in the back office there. So let's talk about some of the misconceptions again. And I know I talked about this on a different episode. We want to make sure that I don't leave these things out, right? Some of the common misconceptions, like I'm young, I'm very healthy, I don't need life insurance. Well, the reality is the younger you are, the cheaper it is. So you want to be able to start having someone to give these discussions early enough. If you're in your early 20s, maybe you just got out of college, maybe it's a great time to sit down and have someone review and talk to you about what's ahead in your life about this type of planning. And parents, if you think your kid is getting to a point where they're ready to start making these types of decisions, I'm going to ask you to maybe consider sitting down with someone who does this for a living, an insurance agent or a planner. And then you can start to talk about what the differences are. Number two, my employer provides me insurance or life insurance. Well, the reality is that your employer-sponsored plan has limited coverage. We already know that. And usually 1 to 2 times your annual salary. That's not quite enough when we're talking about planning life insurance for you and your family when we're talking about it over a long-term needs. So that's perfect segue when you're speaking to someone about their insurance risk, because they don't know. The consumer doesn't always know that they may need to be planning for 15, 20 years ahead. Meaning if something were to happen or we had a lights out moment today, could I provide the same level of income for the next 15, 20 years as if I were around? 1 to 2 years may not get it. And this is up to the type of planner that's talking to you, the consumer. And sometimes this is missed. And another third one is it's too expensive. Life insurance is too expensive. Well, I think the reality of that is there's various types of insurance. There's term life, there's whole life, there's universal life. There's a combination of these things. When you get into more custom work, they're blended. So it can be quite affordable. It can be quite affordable, and it can have substantial coverage if you have a combination of all of these things, if it's built in the right way, engineered the right way, and designed the right way. Number 4 is I don't expect to I don't expect that I need life insurance because I don't have any dependents. Well, the reality is, even without dependents, life insurance can cover your funeral expense. It can cover your debts that you need to pay off. It can help you leave a legacy to your favorite charity, which is one of my favorites during the holiday season. Um, these are opportunities that you can leverage the life insurance versus using up your cash flow. And number five, I'm saving and investing. I don't need life insurance. Well, the reality is, while you're saving and investing, and we do know those are important, they may not be enough to cover your immediate expenses or your long-term financial needs. So we want to be very careful with some of these misconceptions that most people have, and we want to make sure that we have the conversation. And I think the more that we have it, the easier it gets. Hey, Brandy, thank you for checking in. I see you out there. I see you guys. I am paying attention. I am paying attention. Thank you so much. So some of the challenges that we're talking about right now is when deciding on coverage, right? Is when do I start thinking about life insurance? When do I start thinking about it? And then understanding what types of policies fit me best, right? I know I get this question all the time. Which one is the best? My answer has always been the best type of life insurance to own is the type that's in force when you need it. You know, over my career, I don't think I've ever had anyone that has had a lights out moment, and in that time, while delivering a check, they don't ask you, is it term life? Is it whole life? Is it universal? That's not a real question in the real world. The only thing people are concerned about at that time is if you're covered. And if you're covered in this, how are we going to pay for these expenses? These are the matters that mean the most to them, most immediately. So understanding that the types of policies that are out there, whether it's whole life, term life, universal, or even variable, even though it can be confusing, you got to rely on your advisor to be able to help you sort that thing out. And calculating the right amount of coverage can be a little bit tricky. It can be, because estimating how much coverage you need requires considering various factors, not just one dimension, such as income replacement. Number two, your debt replacement. Number three, your future education costs and your living expenses. I've seen it so many times where people get caught up in saying, well, I only have $100 of debt. That's all I owe on my car. Or I owe $100,000 on my house. And that's all I got. You're not thinking about the placement of the family income. You're not thinking about the $100,000 a year that you're making every year. And you got 15 to 20 years till you retire with a spouse and 2 or 3 kids at home. Even if you paid off the house, you still got to eat. You still got to pay the gas. You still got to pay the bills. You still got to travel. Do you want your family to maintain the lifestyle? That's really what I'm saying. So evaluating these long-term needs is so important. It's monumental when it comes to planning for the insurance piece of it. So that brings us to number 2, evaluating the long-term needs. So your life insurance needs may, and over time, we have what these things call life events. You know, people get married. We have children. We retire. Planning for these changes, it can be challenging at times because we don't know. We really don't know. But we have to talk to you. We have to sit down and plan it. We have to do our annual review and sit down and go over what's happened, what's changed, How are you thinking about it now? Was the plan set up when you were in your early 20s and now you're in your 40s? These things have to be updated. Okay. Number 4, navigating your health requirements. See, life insurance policies often require medical exams, and pre-existing health conditions can impact your coverage and your premium. So you want to be very careful. If you were very fit in your early 20s and you got a dad bod today, you're probably not going to be at the lowest rate for your insurance company. Or if you have a poor driving record, it may be very difficult for you to get life insurance coverage. So these are some of the reasons why getting coverage much earlier in your life can be better, because you could lock into the premiums based on your current age and before certain things in life impact your premium, such as your driving record or your height and your weight and all these different things. But one of the biggest drawbacks is your age. The older you get, the more expensive the premium. That's the bottom line. So number 5, we're going to talk about the cost of the benefit. The cost of the benefit is finding the policies that offer adequate coverage at a price that you can afford. That requires some careful comparisons. Sometimes you only looked at one plan. If you're dealing with a broker that can take a look at multiple plans or explain to you why they're only looking at a singular plan. If you're dealing with a planner, they probably already know why they're recommending that particular program from the very beginning. And in our other episodes, you might want to go back and check it out. Referrals versus recommendations. Be careful listeners, folks. When your expert talks about recommending a certain program, that means that they have had some personal experience with it versus referring you a program, one that they didn't have expertise in or didn't have a personal relationship with, or they haven't built it this way, never designed it that way. They're just going by what they've heard or read in a book. That might not be the best way to go about it, right? So number 5 is balancing those costs and the benefits. So after you've balanced them and you know what the comparisons are and you've evaluated the different options available, then you can make an informed decision that's going to fit you and you'll be comfortable with your decision and you'll know absolutely what's going on. So take it from me, understanding these misconceptions and these challenges that we're talking about, it can help you make more, I like to call it, informed decisions about life insurance needs. So if you have any specific questions or you need advice on a particular aspect of insurance or life insurance, please give us a call. I love to help. Okay? I like the fact that we're having this conversation because many times the consumer, it's assumed that the consumer understands what they're talking about or who they're talking to and where they're getting their information from. But then again, the consumer relies on the agent to know exactly what their needs are. And you just want to be very careful because depending on the background, depending on the focus of the business, you may find that particular agent, all of them are agents. If you're selling insurance of any kind, they're agents. They're agents. They're licensed professionals who can sell the product and offer it to you. But how they use it is different. If they're planning or if they're product pushing, is a little bit different. If they're planning, they're going to be able to answer these questions for you from a long-term perspective. Okay. Is there any questions out there? as we're going through this, because there's a lot to tackle today, because I'm about to dive into it pretty deep. And I just want to make sure that you guys are catching exactly what's going on, because we want to inform you. I want to make sure that not only are you informed, that you can actually have this conversation and know exactly what you're talking about from the very beginning. I know it's interesting to me. One of my biggest things that I applaud my clients on, and my existing clientele, one of the things I really like is when I'm hearing my clients talk about what they actually have. And they're so well versed in what they own and how they work. Many times they're teaching the agent that comes up and is trying to sell them. Because if you take the moment to make sure that your clientele understands the differences in these things, your clients become your biggest advocates, because you took the time to educate. And that financial education is paramount. Okay? It's paramount. And that's all we want to really focus on today is, hey, why is this so important? This is so important to us. And I want to make sure that, we drive this home today, because I get this question all the time when I'm out and about. And what's the difference? Which one is cheaper? Why should I buy this? My agent pushed this on me. Well, maybe he didn't push it on you. Maybe there was some detail that you mentioned that forced them to start to look at it a certain way. When we return, we're going to talk about insurance planning and the different in the client-centric approach. And I think you're going to find this one very interesting. So stay tuned, sit back, relax, and unwind. We got much more to offer. Hey, join our Lifestyle Focused Wealth community. Membership's starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. All right, so we're talking about the life insurance planning. And under life insurance planning, we're going to be talking about the client-centric approach, the assessment. And this part of it is pretty interesting. It works both for the consumer as well as for the agent, because I think when we have a client-centric approach, you start to find this out. Most financial advisors and planners, they conduct a very thorough assessment of their client's financial situation. They ask about their future goals, their family needs, and this often includes evaluating the income, your debt, savings, and your future expenses like college tuition or retirement. So in this approach, a lot of times the consumer doesn't understand why you're asking all these types of questions. Well, that's because this particular type of advisor or planner is using a client-centric approach. It's much more personalized. So when we start to talk about personalization, the plan is tailored to fit the client's unique circumstance. And this ensures that we recommend the right type and adequate amount of insurance that is appropriate. Okay? The third item on this list is long-term relationship. In the planning methodology, planning often involves building a long-term relationship with your client and with our friends and family. So by revisiting and adjusting the plan year after year after year, it changes when life circumstances change. And that's going to happen. That's normal. So you want to have your update or your financial review, go ahead and schedule it. It's okay to go ahead and schedule it 6 months to a year in advance. Why? Because we don't know what's going to happen. Maybe you get a new job. Maybe you move from a different town. Maybe You got married. Maybe you have a new child. A lot of things happen. Or maybe you just became a grandparent. You know, these are some of the opportunities that we got to think about, right? And I'm looking for you guys in the comments. If you want to add more information, please do so. Please do so. So, um, let's talk about the impact first of all. I want to make sure that I touch on this. The impact on consumers. And the first part of that would be, is it a better fit? So consumers are more likely to get a policy that truly meets their needs, okay? And sometimes the consumer may be looking at their need differently than the whole comprehensive need. Financial security is another thing. When we're comprehensive planning and when we're talking about comprehensive planning, families are better protected financially when they do this style of planning. And the third thing is peace of mind. It's just knowing that, hey, our insurance plans have been well thought out and they're tailored to our specific needs, and they provide us the financial security that gives us the peace of mind. This is important when we're talking about the client-centric approach. When you have an advisor sitting down planning with you, it is not a cookie cutter program. It is not a 5 and 10 minute sale. This is a relationship that you're building. And it's okay to explain this to your client as you move forward. I think more advisors should do that. I think our clients tend to appreciate the fact that they're being educated on being able to tell the difference. The second type of approach is that product-centric approach. This is the kind of this approach. You'll have people get more of a sales quota, right? So insurance agents often have sales quotas that they need to meet, which sometimes pressures them into prioritizing closing the deal over the best interest of the client. I hate to say that, but my job here is just to be 100% transparent with you and just to let you know how it works. So if you're out there doing these things, a good agent, I'm telling on you too. Because everybody needs to know. We need to be able to put you out. And up, the agent might be more like, it might be more pushy to talk about selling something that's more expensive. Now, please don't get what I'm saying mixed up. More expensive doesn't mean all insurance is cheap or inexpensive, because it is based off of your needs. If you're in the client-centric approach, you will find that those programs are bigger. You will find that those premiums are higher, simply because it is custom built for that family. But here in the product-centric approach, we're talking about someone who has an exorbitant amount of insurance, or their costs are off the roof, and they don't necessarily need as much of the risk that you see them purchasing. So we want to be very careful with that. So these policies have additional riders that might not be necessary. And most of these types of plans that I'm talking about are a one-size-fit-all type of deal. So there is a risk of recommending generic policies without diving deep into it like you would in the client-centric unique needs analysis. So if they're not diving into it and not asking you these questions, you can immediately say, this approach is more product-centric. This is probably more a one-size-fit-all type of advisor, okay? So how that impacts you as a consumer? Here's some things I need you to consider. When you're dealing with a product-centric approach, as the consumer, you may have some misalignment, because the consumer may end up with a policy that doesn't really fit or cover your needs, not completely, or it may be too expensive. It may cause a financial strain. And financial strains, being sold more expensive policies than necessary, can put a strain on the consumer's budget. Okay. And thirdly, it can put a lack of trust. The high pressure sales tactic can lead to mistrust with the client and dissatisfaction with the insurance provider. And quite frankly, that makes it very tough for advisors like myself when we're going in and we've talked to clientele that have been abused in this way. And I say abused because it's simply very difficult to overcome the trauma that was caused by someone who had sold them something that maybe shouldn't have been, or the mistrust. It's hard to overcome the mistrust. And, as a professional, I look at it as an industry. We need to protect one another as an industry, and we need to protect our clientele. And the consumers deserve the absolute best at all times. And so my takeaways from this is, while sales tactics are often driven by the need to close a deal or meet a quota, life insurance planning takes a much more holistic approach, and it focuses on the client's overall financial well-being. And by understanding these differences, the consumer can make an informed decision and seek advisors who prioritize planning and personal service over high-pressure sales. If you'd like to have more information on this topic, if we've created some value for you on this topic and how to choose the right advisor, you need some questions answered, please go to our website. Click on our Lifestyle Focus website, or just tap on the roncojohnson.com. Schedule a one-on-one meeting. Let's talk about it. All you have to do is ask. Everything we need is in our room. Everything we need is in our room. Boy, I see our back office lighting up today. And I'm hoping that I can get to all these comments. I see there's a lot of takeaways. Are we dropping enough nuggets for you today? If you are looking at, give me a thumbs up in the comments and let us know. We need all the information to keep our traffic going. But if you don't mind, I'm going to keep going for now, and I'm going to come back. And I promise, gang, all you folks in the comments, I am going to come back to you while we're talking, okay? It is so good. Let me just take a moment. It is so good to see when you guys are talking. Why? Because when you're talking, the things you're talking about, I know that there's other people talking about it as well. And the things that we are talking about, we're able to get answers, and we're able to help other people get answers in a much more effective way. No one wants to make these decisions alone. And a lot of times we serve as that conduit for those people who are out there alone, right? That's why we need to be together. This is why we need to be together. I really feel that way, okay? So where were we? We're going to talk about the takeaways. One more thing I want to make sure that I say. We want to make sure that you, the customer, the client, has proper planning that can lead to a better lifestyle. That you can have better financial security compared to having just aggressive salespeople throwing something against the wall and seeing what sticks. So these are my key hindsights, key insights that I want you to really focus on for today. Proper life insurance planning can provide the foundation for long-term financial security. I need to make sure you hear me. While we do understand aggressive sales tactics, it might result in inadequate and excessive coverage. So what we're talking about, our planning insight, when life insurance is planned thoughtfully, this is what happens. You have a needs assessment. There's a thorough analysis for your financial needs that ensures that your coverage is in alignment with your specific circumstances. Like I said earlier, income replacement is important. Debt repayment is important. Future expenses is important. When you take those three factors and you add them in, naturally, the picture gets bigger, more comprehensive, and more thought needs to go into the type of planning you're doing. If you got custom fit policies, these policies are chosen to match your lifestyle. It's designed to be able to adapt to your life stages and your financial goals. So it ensures that you're never underinsured, nor are you overinsured. I call it future proofing. So you can do future proofing just simply by regular reviews, right? And adjusting your coverage from time to time as is more and more relevant to your changing lifestyle. If you got married or having children, or if you change jobs, these things are consistent. That's when you need to be booking some time with your advisor, your financial coach, and saying, hey, 6 months from now, this is my plan. This is what I want to discuss, and give them the appropriate time to actually plan it. Don't rush your advisor to give you the answer immediately, not if they're a planner, because there's just a lot to think about, okay? And I think, once again, by educating you as a consumer of what the expectation is that you get from the planner is important. Because if you're going to a planner expecting a product right away, you might not be satisfied. And if you're going to a product pusher, but you're wanting planning, you're probably not going to be satisfied. So you want to make sure that your goal is in alignment. If you're one of those people who just want to buy, a one-size-fit-all type of plan, and that fits you, and you don't really want anybody to tell you any different, make sure you go to that kind of advisor or salesperson. There's policies out there for you. But make no mistake, they are not the same. They sell the same product, but these two people and these two types of advisors, they're not the same. Take it from me. They're just not the same. Okay? I'll say that multiple times on today's show. So what do we got out here? Listen, what are you saying? I don't think the potential clients understand that it's much cheaper premiums when the child or children are younger. Set up a tour children policies. I guess what you're saying is getting your policy early is key. I do totally agree with you on that. I do. There's so many instances where a child can mess up. They can have a car accident. They can get a DUI. There's so many different things that can be done that can keep you from getting insurance. Okay? Hopefully I'm driving this home to you. I really want to make sure that we are getting the best out of this information today. Hi, Leela. This is why we ask these questions to our clients, to get a clarity about specific needs. It's so funny that you say that. There are times when you may talk to a prospect or a client that is not aware of the difference between a salesperson and a planner. And they may ask you, well, I went to the bank and they didn't ask me those questions. Well, the bank is more transactional. You're probably not sitting with a planner. Well, and they're not looking at all the other things. They're just trying to take care of your immediate need. It's not saying one is better than another. It's just understanding where their focus is coming from. Okay? Understanding where their focus is coming from. Okay? So let's talk sales strategies for a second. When the salesperson comes to you, the aggressive salesperson, I want to go ahead and address this. And I know some of my advisors out there that listen to me, they may not agree with what I'm getting ready to say. But that's all right. You know, I'm an advocate for what we do, but I'm also an advocate for our clients and our prospects. And sometimes these sales strategies are a little bit aggressive. And these aggressive sales tactics and strategies, they can lead to, again, these three major things. A mismatch. And when I say mismatch, that's being sold a policy that doesn't fit you. It's either too expensive or it doesn't cover key areas that you might have expected to be covered. Number two, unnecessary add-ons. The pressure to buy additional riders or features or all these different things that you might not need on your policy can increase your premium. And then short-term focus. You know, less emphasis on long-term financial security and more on the immediate sales target. That's a problem because it's not focused on the client at all. It's focused on the agent's pocket. And I think it's important for the clients to understand and the consumer to understand, if this is happening to you, don't be surprised if your agent is not around in 2 years. That turnover, the turnover ratio for new agents under 4 and 5 years is upward 92%. And that's an industry statistic. So the impact from this financial security we're talking about is proper planning helps secure your family. You can maintain your lifestyle in the event of someone passing early, providing you peace of mind and stability in your family. And on the other hand, aggressive sales tactics may lead to inappropriate coverage, and it doesn't offer you the protection for you or your loved ones that you might really, really need. So in essence, investing the time to properly purchase insurance or life insurance and using a planning methodology is like building a sturdy house on a foundation that's super strong. I'm going to tell you, it's designed to weather the storm. It's that simple. So we want to make sure we provide the safety and the security for you and your family for years to come. And that's really what this is all about. If you like to explore these strategies of how to build an effective life insurance plan, or sit down and go through a planning conversation with me or some of our folks at L.R. Johnson and Associates, we can help. And they can help summarize what your outlook looks like, okay? So just remember, in summary of what we're saying, life insurance planning focuses on understanding and meeting your specific financial needs. And it's providing you tailored coverage that ensures long-term sustainability and financial security. In contrast, life insurance sales tactics might prioritize immediate sales, okay? The potential for leading you into inadequate coverage or even excessive coverage at times. So We want to make sure you plan properly. And proper planning simply does this for your family. It helps secure your family's future, offers you the peace of mind that you're looking for, and highlights the importance of making informed decisions about life insurance. So choose planning for a custom fit and better protection. That's just my suggestion. Maybe I'm a little biased, but I think you deserve the absolute best. I think you deserve the absolute best. Thank you guys so much. I see all the comments. That makes me feel so good. That makes me throw up a heart to you guys. I really appreciate it. We put so much work into making sure that the information we give you is right on the line, and that you can take this information, and we want you to, if you're going to regurgitate something that makes sense, right? We want you to talk about the things that make sense. We don't want to be out here talking about things that are harmful to our community and to the public. We don't want to be doing that. We want to make sure that our financial wisdom is coming from a safe place. And that's why this program is so important to me and others, because we want to be the resource. We want to be the resource that you think of when you're considering making a move, when you're considering making a change. I think all these things are important. Let's see, I got another takeaway out here. So are you saying it's important for their children has insurance at an early age and pay less, even though they're not sick? Interesting question. The wrong time to buy life insurance is when you're sick. The idea here is you want to make sure you do this before they're sick. Okay? We don't want to buy anything on anybody that's sick. The reason why it's good to think about insuring a young person early is because it limits the fact that there's other issues, that life challenges and changes that can happen. You may have a young person that does, have some health challenges, but the earlier you catch them and the earlier you insure them, at least that part is covered. You don't want to wait till you guys get to teenagers, and sometimes you have a teenager that may be a little rambunctious, and they may make decisions that may not be wise. We all know what we're saying. But those decisions that they made while they were teenagers or young adults, it may encumber their ability to purchase life insurance. Or it may increase the cost. And at that point in their life, they're not really sure, or they're not even thinking about insurance when they were out driving their car with their buddies. That's not on their brain. Okay? So we want to make sure that, these things are ideally custom fit. We want to make sure we have these conversations, because a question just like you just asked, it can put it into the conversation. You can put it into the conversation when you're speaking to clients on a day-to-day basis, or you're speaking to your agent or your advisor on a day-to-day basis. Hey, what do you think? I heard this. That guy Ronco Johnson said I might need to think about insuring my kids. I tell you now, one of the best gifts for the holidays, Christmas, is a gift of life insurance. Go ahead. The gift of life insurance. Why not? The sooner you get that out the way, that conversation's over with. It's over with and done. You can get back to living your lifestyle. Is there any more statements or any more questions out there? Man, you guys are lighting us up today. Lighting us up today. This is fantastic. Hey, don't forget, if you want more information about how you can control your financial future, just start by letting us help you. Let us help you. Just click our message below and talk to someone. That's what we're here for. And don't forget to ask us about joining our community, right? It's $16 a month. All you got to do is go to LR Johnson and Associates or RoncoJohnson.com and ask about our Lifestyle Focused Wealth community and join us. And don't forget at the end of this episode that down in the descriptions below, sign up for our weekly, our bi-weekly newsletter or email. It's pretty engaging. It's pretty fun. There's a lot of different things when we talk about all things lifestyle, art, travel, food, business, and relationship. Guess what? It all takes money. All of that takes money. Someone says, what does that got to do with the wealth lifestyle? Well, if I travel, I still got to buy a ticket. If I want to buy fine food, I still got to buy that food. These are the things that we're talking about when we're talking about long-term comprehensive planning, right? Love it. Love it. Hey, well, listen, you guys have been great today. I could go on and on and on. I wish that I could sit here and continue to go through it much, much more. But I tell you now, what I'm going to ask you to do is do me one more favor before you leave. Smash the like button. Give me a thumbs up. Share with your friends on social media. And don't forget to hit that notification bell. That way next week at 1 o'clock, you know that the new content is coming out. And we'll see you back here joining me. And we'll be talking about something else that you can put in your pocket. Something else that's really hot. Something else that's going to be worth your time. Hey, that's my time today. I'm Ronco Johnson, your Lifestyle Focused Wealth Coach. And I look forward to seeing you next time at the top. And hey, be kind to each other. It's Lifestyle Focus Friday. And be safe. Be warm. And I look forward to seeing you next week right here, 1 o'clock on Friday. And don't forget to bring a friend. I'll see you next time. Until then.